Okay, Mark, it's good to have you here. We are gonna discuss the current status of the sustainable finance and the progress of the sustainable financial disclosure and etc. We are shooting this video for the audience, mostly in Japan. The conference is organized by JFSA. So I'm really glad to have you here. Thank you for joining us.
Well, Hiro, it's a pleasure. First off, it's a pleasure to see you finally in person. And I'd like to thank the JFSA for bringing us together, but also for bringing together many of the foundations of the progress that's been made in the last few years. And you've been instrumental, but absolutely the JFSA has been instrumental in building the momentum and the foundations that we're seeing in sustainable finance. And I'm sure we'll get into that.
Absolutely. Thank you. So first of all, let me start with asking you to bring particularly Japanese audience up to speed what happened in Glasgow during COP26 because of the quite strict the COVID quarantine policy. As you probably realize that there are very few Japanese participants over there. So I have been trying to convey with my Japanese the friends and peers that there's such a strong momentum.
Yes.
And I would say it's almost like a passion about the private sector commitment to net zero. And we worked on the G funds, and it was a great success. But if you could describe what you observed over there, because I think it's very important for the Japanese audience, particularly to feel that they are actually not left behind. About this kind of the movement.
I agree with all of that, and it's hard not having been there. But and I'll come to the private sector in a moment. But let me just underscore, and again, Japanese leadership this time last year at President Biden's climate summit, Japanese leadership then through into COP helped ensure that we moved from a world where a third of global emissions were covered by net zero commitments of countries to 90% at Glasgow, that we had a series of side agreements on methane, on coal, on deforestation that were added to momentum. So the country level commitments were quite significant. There were a series of regulatory things that were accomplished there. And again, Japan helped lead the way, the ISSB, and maybe we'll talk about that as being one example. But you're absolutely right. The big news at COP was the scale and the involvement and the commitment and the enthusiasm of the private sector. I'll give you two figures. I know you like numbers. We're now in a position, about 2 years ago, there was about 600 companies that had net zero commitments and were working on science-based plans. Now it's over 7,000, so a huge, and the big run up to COP push that. And then the big element in the financial sector was to bring together all the banks, insurers, asset managers, asset owners, all the people that you've been dealing with over the years, and you and I through GFANZ, and we're on the steering committee for that, to create this alliance, the Glasgow Financial Alliance for Net Zero, where $130 trillion of balance sheet is committed to be managed towards net zero. And not just 2050, but 2030 objectives, 5-year decarbonization targets, and annual reporting of all of the emissions of their portfolio companies. That's the key thing. It's not just about the institution itself, although it is that as well, but it's all of the emissions of the portfolio companies. And that is a game changer as this gets put into place. And I would suggest that just like with TCFD and disclosure, where Japan helped tip the balance and lead the way in making it as effective as it has been, the elements of GFANZ, the core work of GFANZ, we're really going to need Japanese engagement over the course of the next few years, because this is going to be the key time to set up the system for the net zero transition.
Absolutely. Well, I always, feel that what's really missing in our financial analysis in terms of the net zero transition pathway is like we have never agreed on a base case scenario. So when we talk to the financial analysts, like probably even 6 months ago, they are saying like, oh well, maybe 2.0 by 2050, maybe we're not achieving. So it's just very hard for the people to agree on this is the base case. We should evaluate our asset relative to.
Yeah.
And the one of the biggest achievement, in my opinion, of the COP26 is we now very clearly and even loudly said our base case scenario is going to be net zero by 2050, which means 1.5 degree rather than 2.0. So I think the people who participated, or the institutions who participated in the G funds, I think they should translate that. I mean, CEO, just we just cannot make it like a CEO is making the marketing statement saying like we are committing net zero, we are a clean organization, right? We just need their analysts and their bankers to really reflect their analysis, their decision making of their climate risk, reflecting the new the base case scenario. But do you think that that's actually happened?
Well, it's an incredibly important point, and let me expand on it. First is that one of the things in Glasgow, which was to tighten the objective from Paris, because as you know, Paris was less than 2, let's try to get to 1.5.
Right.
But the 190 plus countries in Glasgow signed up to 1.5 very clearly. So that gives the base case on a global basis. And then the question is, well, what happens by various industries? What's consistent in a manufacturing sector, in industrial chemicals, in steel, in autos, in tech, consistent with that 1.5 degree scenario? So we also have to get what are called sectoral pathways for those various areas. I mean, you know all this. And one of the things that GFANZ is doing is bringing together all of the different organizations take efforts at different elements of this. Science-based targets would be one, Mission Possible would be another, again, and we need, as a matter of some urgency, to decide on these pathways that then the financial industry uses as a reference when they're allocating capital to an auto manufacturer who's converging, who's not. So that's a big part of that work plan I was talking about a moment ago. And what viewers should expect is that we'll put out the first draft of this approach, not a finalized approach, first draft of this approach over the course of the summer. And we really want input. And then again, over the course of the next year or two, to coalesce around, to have a consensus around these base cases, because everyone can agree it's a good thing to put up solar or wind or very clean energy. That's the simple.
Absolutely.
That's the simple bit. The challenge is for the mass of the economy. How quickly do you move to being aligned with that net zero pathway for your sector? And so we need those references, and that's a huge amount of the work.
We have been talking about the G funds, and there are a lot of expectation from that, the alliance of alliances. And it's, I was so excited, this is probably first time that many, the leaders of financial institutions got together and make the collective announcement. But on the other hand, I'm getting a little bit concerned when I'm listening to you're making the announcement on the stage, if we fail to follow through, this can be regarded the biggest greenwashing, the events in the history. So we just need to make sure that we will follow up with the actual actions. And what do you expect that that we are going to get, or that's going to come out of that the G funds? Particularly this year toward the COP27.
Okay, so let me go for the next few months. And what people should expect is that we will have a consultation on what is a good or a best net zero transition plan for a financial institution, whether you're a bank or an insurance company, an asset manager, pension fund, et cetera. What is the minimum you need to do in terms of your metrics, your governance, your strategy, your disclosure, et cetera? And that consultation is, as I say, will come out in June, basically. Secondly, what type of sectoral pathways should we be using, what we just discussed? Thirdly, what's being asked of companies above and beyond TCFD disclosure for their net zero transition plans? And then finally, bringing that all together, how do we look at the alignment of portfolios with the transition? So, and it's the sum of the various elements. And I say that's finally, actually, I missed one, which is we all know there will be unfortunately, a number of stranded assets. And there's basically two ways to deal with those assets. One is to push them into the shadows to those who aren't part of GFANs and who might run them for much longer. And the other is to transparently and responsibly manage them and phase them down. But we need a framework in order to do that, or else it will be greenwashing within GFAN. So that framework will come out. So 5 different documents, if you will, 5 different approaches that are part of this overall system. They will all come out between now and the UN Climate Week in September. And so we need feedback into that. So that's one big block of work. The second and related block of work is you'll see a series of announcements around data initiatives to bring together the output of all of this work so that the world has a single open source reference point to tell who's doing well and who's doing poorly. Okay. And then the third big thing is that for COP26, a number of the financial institutions, a number of the banks that joined in April of last year, a number of the asset managers will put out their first decarbonization plans and objectives. So we'll see that for COP26. And the fourth thing, I'm almost finished. I have 2 more points. Fourth thing is the official sector is working, and the Japanese government is part of this, is working on country packages for some large emerging economies that are very heavy emitters. Indonesia, Vietnam as 2 examples, India, South Africa. And ideally there will be an agreement for COP27 of accelerated phase down of these heavy emissions, accelerated phase up, if I can put it that way, of clean energy, and the financing in place for that to happen. So there's a lot going on in that regard. If I may say one more thing, though, and you know this intimately because you've helped lead on this, is we have now in GFANs, this Alliance of Alliances, all the financial services providers, the infrastructure providers, the rating agencies, the index providers, the accounting firms. And there's a whole host of their products and services that need to become aligned with net zero. And we're thrilled that you're going to lead that effort because it's the most complicated and difficult element of it. That won't be completed for COP27. It will take a few years of work. But it's the type of work that's essential to have the whole system oriented towards this.
You know, what I found is exciting about the GFANs as an alliance of alliances is I was hoping that will foster intersectorial dialogue. Within the financial system. And the financial system is kind of like very sophisticated and interdependent, right? So I always said even the biggest asset manager cannot make their portfolio net zero unless their customer, asks them to use the benchmark which is aligned with net zero. So, and the bank cannot, make their portfolio net zero unless the credit rating changes, and the regulator who now use the credit rating to calculate their capital adequacy to intervene to make it happen. So it's really interdependent system we are talking about. So everybody should hold the other player accountable to make the system net zero. So that's my the biggest expectation from GFANs.
Yeah, you're totally right, and that is the first most important thing. I think that as well, though, we in the financial sector have an obligation for those companies is not to be asking for a bunch of different things because I'm an insurance company versus a bank versus an asset manager. So this way we get a common approach, and we're asking for the same thing. It's much more efficient and much more impactful.
I think that's what I think I want to see, within the Japanese financial industry, because they need to talk to each other. They need to involve the regulator to make, make their commitment real. So that's something we are hoping to see for the next 6-9 months. I just want to move on to the financial disclosure on the climate.
Yes.
And then, as you know, the Japan has been championing the TCFD effort, and which the UN, Mary Shapiro led it. And I was really glad to see the Japanese company, they implement that, and they gather the coalition to study together and etc. So I must say, Japan has become the one of the strong force to promote the TCFD.
Without question.
Right.
Yeah.
And then now another big announcement or exciting announcement on the Finance Day at the COP26 was IFRS is establishing ISSB, International Sustainable Standard Board, and our friend the Emmanuel is now leading it.
Yeah.
So, can you just share with you that your view on how the TCFD, which the Japanese corporate and financial institution put a lot of efforts into, will be integrated into that effort, or you think how the TCFD will play its role? In the financial disclosure.
So let's cast our minds back probably 3 years now, and 3 and 4 years now. So you and I participated in some important conferences and discussions with Japanese industry and the financial institutions, but really, industry as much as anything, and the JFSA and others, to help understand where the world was going and how Japan could help lead that. And exactly as you said, I mean, Japanese companies became the largest numbers of TCFD supporters. The JFSA integrated the TCFD into the corporate governance and the stewardship code, showing real leadership and leadership that had an impact on the G7, because then other G7 countries moved to different forms of mandatory TCFD type disclosure. And all of this came together, as you say, at COP26, where by that point, there were 45 major countries covering 75% of global emissions. It's grown since then, that supported this new International Sustainability Standard Board. Their first job in coming up with sustainability standards is climate disclosure. They will explicitly base it on TCFD. In fact, a number of the people from the TCFD are already working with the ISSB. And as well, they'll bring together other approaches such as SASB and to simplify the system as a whole. And the expectation is that this disclosure will become mandatory in jurisdictions. So the UK has already announced this. Canada's moving towards it. The US, separate and related development with the SEC, putting out its climate disclosure draft, as you know, explicitly based on the TCFD. So what's happened, not in no small part due to Japanese leadership, is that the world is coalescing on TCFD. It's becoming the foundation for the ISSB for potentially 130 countries. That's what the IFRS ultimately covers, and the SEC with their standard. And so we'll have pretty close to a common standard, again, based on the TCFD. Japanese companies will be well familiar with it and have helped lead. And this is, it's a huge development.
I'm really glad to hear that, because I started hearing from the Japanese corporation that Mr. Mizuno, do you think our effort will be wasted?
No, it's the exact opposite.
It's a great, that's a great preparation process for that.
And my suggestion would be that with what we were talking about a moment ago on these net zero plans and how the system organizes, something similar will happen at different speeds in different jurisdictions, that the approach that ideally gets developed principally in the private sector will then become mandatory in the public sector. And the UK has already announced they will make these mandatory. GFANZ has a informal but regular reporting relationship to the FSB, the Financial Stability Board, so that they know what we're doing. And of course, those authorities at the right time, I would expect, as a former chair of the FSB, would take up.
I see. So, Mark, I wanted to hear your view on the impact of this, Ukraine, the crisis, on our transition pathway, and I'm really, worried about the hearing. We started hearing some of the people. We still have some of the group of people who really think we can push back into our comfort zone, and then there's a lot of immediate needs for fossil fuels in Europe and et cetera. And Japan has been struggling with restarting a nuclear power plant, et cetera. And those kind of things, like, when this kind of crisis hits, it's kind of like encourage some group of people like, we have been pushing too hard, that maybe this is a time to rethink. And we probably has been not realistic about the sustainable energy transition, etc. But what is your view on I
have a few reactions, Hiro. The first is, it shows the unreliability of the fossil fuel system. Once again, we're in a fossil fuel crisis, prices spiking, and a scramble for energy. Secondly, in the near term, there is a scramble for energy, and in a number of jurisdictions, that scramble will lead to higher emitting energy, including coal. So it's bad news for the climate in that it will use up more of the carbon budget. The third thing, though, is that it is a wake-up call again to the challenges we all have with energy security, and as countries step back and say, well, what can we do about it? They recognize that the overlap between sustainability and energy security is virtually total. And so we see the response in Europe, which is to triple hydrogen by 2030. The UK, same thing, tripling hydrogen. Germany moving to a clean grid is their effort by 2035. Probably an additional 450 gigawatts of clean power that will be installed. So all of the movement is to accelerate the transition, because in the end, once clean energy is built, it's your own sun, wind.
It's energy independent,
you're energy independent, and your own hydrogen, etc. And of course, Japan has helped lead on hydrogen. So, and actually, I should say one other element of this is it has pushed the economics, it has improved the economics of hydrogen. They have been improving in the last few years. It's reasonable to expect that we will have more of a global gas market as a consequence of this, Russia excluded, more of a global gas market, a higher price for gas, a lower relative price for hydrogen. And of course, one's a transition fuel, gas, and the other is a long-term solution. So it's good news for the hydrogen economy. I don't want to downplay the scale of investment and the decisions, but in the end, energy policy decisions to really have an impact take 5 years, 7 years to happen. And once you have that horizon, then the case for clean energy is overwhelming.
Sure. Well, I really need to, stress this. I cannot stress this enough. Like the people, when this kind of crisis happens, the people just, the kind of like you see the bipolarization of the people who are trying to accelerate the change.
Exactly.
And the other is trying to kind of like slow down the progress. So it's a critical timing for the world and for the humanity. So I think your effort has been quite appreciated. Last question from me, and I want to discuss, to wrap up this conversation, finance should play much more role to accelerate the transition to sustainable, the society of sustainable future, which has been obvious. But two things I still think is missing, the missing link to achieve that is, one is how we can channel more capital into developing economy.
Yes.
The G funds, their aggregate asset under management is $130 trillion. And the OECD says to achieve SDGs, we need a $2.5 trillion annual investment. And $130 trillion seems, enough. But in reality is, OECD also says 2/3 of that money should go into the developing countries, while my understanding, if I was wrong, just correct me, about probably less than 10% of that $130 trillion currently allocated developing countries, less than 10%. Yeah. So how we can, channel more capital in developing countries, particularly support their, the green infrastructure and helping them to cope with the, cope with the actually for the next 10 or 20 years, they have to deal with a lot of the natural, climate crisis, right? Yeah. Natural disasters. And the second question is, it's obvious we need a lot of like a technology and a new innovations. And do you think like, the G funds, basically, we are trying to talk about the long-termism and a long-term, the transition of the financial systems, but we just need to address that, how we can also shift more money into those kind of new innovations. So new innovations and developing countries is where I think we just need to channel more capital into.
Yeah.
Yeah. Well, do you have any idea?
First off, I agree. Those are the two. So the easy bit, none of this is easy, but the easy bit of the transition is the rollout in advanced economies of clean energy, what we were talking about earlier. It's a question of scale and getting the capital moving, but it's highly economic. There's lots of capital and more capital interested in it. It's proven technology. It's relatively straightforward. The tougher bits are exactly what you've gone to. So let's start on the developing world. And the approach we're taking, I mentioned a moment ago, these country packages as the first wave of large-scale financing for the developing world. And what the intention is, we'll see if it happens, but the intention is that higher ambition from the countries, as I mentioned, and that the financing covers everything. So official bilateral financing, World Bank, MDB type financing, blended financing, so better use of these official balance sheets to leverage in private capital for the large emerging economies. And potentially some carbon credits as well for some of them. Now, the two things in this that are important to crack. One is that to the extent to which it's a high ambition country, the financing package is net zero aligned because it's consistent with Paris, the high ambition. And so for the financial institutions who increasingly will care what proportion of their assets are net zero aligned, this will fill that need. And then the second thing is we need to do a much better job of leveraging the balance sheets of the World Bank, of the Asian Development Bank, of these big capital providers so that they're taking risks that the private sector won't take, and we're getting private sector crowded in. And the only way really to do it, I participated like you in many discussions, theoretical discussions of this. The only way to really do it is to have a financing and develop it that way. Now, the difficult question on technology. I think the first thing, I'm going to be positive about it in the sense of you started rightly with pathways. We need a pathway. We need to have a sense of where we need to go. And I think what is increasingly clear is where are the choke points, if you will, or the difficult technological areas. It's not in wind and solar. We need to get hydrogen all the way down, but that's understood and the components of it are there. And there's more and more demand being created by governments for hydrogen. And therefore, I think there's a pathway there. We need to crack carbon capture and storage at scale. Progress there. We very much need direct air capture. A variety of technologies there. And I'll just reference some exciting things there. The technology companies, Stripe led this, Shopify, Google, Alphabet, I guess, put money, almost $1 billion in an advanced market commitment for these types of technologies. Very exciting because it can help accelerate it. But, from an investment perspective, if I may, there's the big rollout of power, clean power. That's sort of clean infrastructure investing. There's growth equity in hydrogen and some of those areas. And then there's venture capital around direct air capture, sustainable aviation fuel, and things like that. It's much clearer that pathway and that decarbonization curve. And therefore, capital can flow to the opportunities as needed.
Yeah, I think that's very important. We need to approach the high-level capital allocation issues as well as on-the-ground project finance, the issues. So, during the COP26, I mean, we are both, UN Special Envoy and trying to promote this. And I focused on the how to make the more innovation, bringing the innovation into the MDB finance. So actually, it was less reported in Japan, but the Prime Minister Kishida's commitment to put in the money with the ADB to create the new transition, innovative facilities. together with the philanthropic money from the US and Europe to subsidize the cost of the borrowing for the developing countries. So that kind of effort as well is that if we can bring a little bit innovation into financial tools to directly allocate a capital into the developing market is actually that makes difference. So I think our effort has been on trying to solve the high level, macro level capital market, the other capital allocation, the problem, and then we are trying to promote the more on the ground project financing make available for developing countries. So I think that Japan can contribute. I think contributing on that on the ground project together with ADBs, but for the capital allocation at the high level, I expect the other Japanese institution and the GFSA should be playing even higher role under your the guidance. So please involve the Japanese JFS and the Japanese financial institution and the corporations. We have been trying to support your efforts, and we're gonna shift the system together.
Well, we're all shifting the system.
Yeah, we are trying to shift the system together into the sustainable future.
Yeah, very good.
Great. So Mark, good to see you again in person.
Fantastic.
I feel fantastic, and thanks for having time with us.
My pleasure.
Yeah, thank you.
Thank you.
Thanks, Mark. Yeah, thank you.